Well, g'day there, traders and friends, market participants right around the world. You are here with James on behalf of Pivot Point Trading as I sit down and bring you this Wednesday afternoon market recap. Today's date is Wednesday, the 2nd of November 2016. Today's worth of trading at least has pushed the markets down below those structural support levels. The S&P 500 closed today at 2097. We have been toying with this potential breakdown trigger at 2112. We have definitively closed below this level also on the Dow Jones Industrial Average. You can see here that we have just closed below at 17,970. The reason for this video is to talk about some possible scenarios which are going to develop and play out as we push towards the election taking place next week and also further into, or to really round out 2016. If this is a material breakdown which is structurally happening before our eyes right now, we're either going to see a back test of this old support as new resistance, followed by again that material correction back down into that primary trend line. As you can see on my screen here, this blue trend line from the 2009 lows, the third decelerating fan line on the S&P 500 and the NASDAQ, the fourth on the Dow Jones Industrial Average. So what you need to pay attention to now is, or at least think about the potential for a bounce. Now, you probably wouldn't be thinking that I would be, at least referencing the possibility of a bounce, but that is entirely, what happens generally when you see these structural breakdowns. Very rarely do you see a market break down below structural support, but not go through the 1, 2, 3 back test, okay? It may very well happen. However, I do believe we are going to see a short-term bounce in the equity markets. Traders are going to buy that bounce. However, inevitably or ultimately, it will be shorted at higher prices. Those prices on the Dow are just below 18,250 on the S&P 500. If in fact the S&P can, gather some steam, we're looking at a price around 2,130, right back to where the September lows were in. We have definitively closed below those September lows. As you can see, we've got the first consecutive lower low presented, and this is continuing off from the consecutive lower highs across the board on the S&P 500. I've been speaking about the Russell 2000 and how this market in particular has been in many instances, a little bit of a warning prior to what I believe is the upcoming sell-off, which is going to take place across the equity markets. As you can see, the Russell 2000 once again closed down 15.42 points today. We have cracked 1195, which is what we've been referencing. We've broken below the September lows. We've also broken below the mid October lows, which has really started this sell-off. And we're also closing below the highs that we were printing during July 2016. So as the Russell was breaking out, or as it was continuing above and putting in consecutive higher highs and higher lows, which is definitively a bullish trend. However, that is in the intermediate move. We've been talking about divergence, which has been setting up between the momentum moving to the upside and some of the prints that we've been seeing on these oscillators. So as you can see over here on the Russell, as the price continued to move higher, the MACD simply wasn't with the move. And you can see the divergence happening between the MACD and price. This is playing out across the board on lots of other markets, more or less on all of the markets. And the Russell is the biggest market to date, or at the current juncture, which is making its move, and the confirmational move has been granted, it has been triggered, it has been confirmed at 1195. So we watch, we prepare, we wait for the reversal signals to show up. We take heed of those cautionary signals, and then we prepare ourselves to trade in the opposite direction. The Russell, again, has been leading the equity markets. It is, to a degree, in a free fall over the past 6 or 7, maybe even 8 trading sessions. This has really taken a nosedive since we've cracked below this intermediate trend line to the upside. So you see how important trend lines are in working with the primary direction of the trend. Well, the Russell hasn't been able to overcome its highs going back or dating back to 2015. Sure, the S&P, the NASDAQ, and the Dow have been able to print a little bit higher, but they are all failing as I sit down and present you with this recording. The Dow Jones Transportational Average is still stuck at that support area. It's printing at 8,025, but however, if you zoom out once again and look out to the bigger detail or the greater detail, again dating back to 2015, we are a long way away from those all-time highs or year-to-date highs in November 2014 and also early 2015. This rally, which has presented itself towards the end of 2015 and to really begin 2016, it looks like an intermediate correction back into this decelerating fan line. We have been hovering above it and it was looking quite promising, but if we get a material breakdown, as you can see, you see this red line here. If price closes below this line, if we trigger below 7,861, that is a very, very bearish signal for the transportational average, and that is also going to apply to the industrial average as well, which, as you can see, is sort of sitting on the brink of a really major move. Now, I mean, ultimately, I believe it's going to happen. What happens between now and then is sort of anyone's guess. Generally, once again, when we see the beginning of a breakdown, we will get that inevitable bounce, all right? And that bounce is what scares a lot of people who have entered into shorts somewhere around this location. Take your price, pick your price. But what generally happens is you get that bounce. It whipsaws a lot of people. They sort of exit out of those moves or sell to cover. Buy to cover. And then once that repositioning has happened, the market will generally flake, take out those structural swing lows, which is, pre-bounce, and then we'll make the move down to those lower areas of support. So the targets again on the industrial average down here around 17,000. We're trading roughly around 18,000 at the moment, 17,960. Give or take a couple of points, and that's a big drop, which is laying ahead for the industrial average if it really gets moving. The S&P 500 a little bit more weak. As you can see, we have definitively pushed below these lower lows. You can see that we're below September and October lows, and this thing is looking very, very bearish. We are getting close to the 200 simple moving averages across the board. However, as you can see, once again, those divergent signals which we've been referencing really for quite a number of months now, they will inevitably play out. You just have to wait for confirmation. So if you have the patience and the discipline to wait for these moves, you will be paid off. Instead of buying, unfortunately for the majority of people who have bought over the past number of months, even from those breakout highs in July, so this is dating back to really late June, you are underwater now. So for all of the people out there who haven't been able to sort of control themselves or at least read the technical picture, right now you may be starting to question, was that original decision of yours to actually buy this market up around these areas with a lot of cautionary signals in terms of divergence and other momentum signals really waning? Now you're probably sitting there questioning yourselves, well, was that the right decision to make? And it looks as though that momentum is strongly shifting to the downside, and it looks as though this breakout, or what appeared to be a breakout, is entirely false. As you can see also on the ADX and the CCI which was above 100, which is positive for a breakout, it has definitively turned negative. In fact, it has severely turned negative. The ADX is turning up. It likes the move. So the trend or the momentum direction at the moment is supported by the ADX and the CCI. Have a look at the Dow as well. When it broke out in July, we were speaking about this. We wanted to at least see the CCI remain above that 100 line. What happened? It turned down below it, and now it's printing into negative figures as well. Minus or negative 120 print the ADX. What's happening? It's turning up on this bearish move. So these indicators, again, they confirm these moves in price. We simply wait here for triggers to be hit once we're comfortable with the trade entry. And then, of course, we allow for a little bit of volatility, a little bit of wiggle room, which is inevitably going to happen around these structural areas. They are very important. They are what we call macro pivot points. And they're called macro pivot points for a reason. There's a battle going on between buyers and sellers. And, very rarely does one side just compellingly win straight up. Generally it is, or it has certain elements, certain sides to the battle. But eventually, once you see certain macro areas crack, there can be a little... It's often a little bit of foreplay before the actual big move happens, so to speak. I mean, expect the bounce, but don't believe the bounce unless it starts to take out 18,430, which is not what I am expecting. I'm expecting the Dow, the S&P, and the Nasdaq to print another consecutive lower high, which is very important moving forward. When we get down to these levels, we'll then reassess the market. We'll look at the technicals. We'll see what's going on at these structural support areas. And then we will gather our thoughts as to whether or not we want to buy this market for a potential continuation. This is going to coincide, obviously, with a clearer picture, the presidential cycle moving forward. Once we do understand who the new president of the United States will be, which will be announced next week. And we'll see how the markets respond to the two candidates who inevitably one will claim the presidency moving forward, and that will address a lot of the uncertainty which is unfortunately taking place in the market right now, and to a degree the recent stagnation which we've seen, and also adding to this false breakout which appears to be reversing right now. So on that note, everybody, have a fantastic evening. I'll be back later in the week. We'll see how this market moves over the next 2 trading sessions to round out the first trading week of November. And if not, I'll see you in the weekend in Pivot Point Pro. All the best, everyone. Goodbye.